Hello friends, this is Dr. Lalit Gupta and let's talk about $1 million question. Is it the right time to invest in stock market? So let's understand in detail why we are even discussing this. Nasdaq has fallen around 30% from its peak. Dow is down around 20%, to be precise around 17-18%. And NSE, that is our Indian market, has fallen around 14%. So I know it's less than US stock markets, but still it has fallen significantly. So is it the right time to invest? So let's discuss that. Let's first discuss why this is not the right time. Because inflation is still increasing. Has it reached its peak? We don't know that. Fed will still will continue to increase the interest rates, and as the Fed increases interest rates, there is a chance that Indian market might fall further. And even our RBI is talking about increasing interest rates to control inflation. So has we reached minima? We don't know. Most likely no. So is it the right time? Let's discuss. Do we actually know the right time? Actually no, we don't know yet. We know that market has fallen significantly from its peak. Whether market will reach the peak again of 18,500 around, we don't even know that. Although we expect market to increase because in the end at the end of the day India is growing, that we all know. So let's talk about what to do when the market will actually make bottom. With my experience I can say, and whatever we have seen so far, market will make bottom when there will be a declaration that some of the economies, US and maybe some of the other significant economies, are in recession. So that is the day when when market will actually make bottom, and that bottom could be, Dow might fall maybe 10 or 20% further, and Nasdaq might actually fall to 50%. We don't know that, but that is the day when market will actually make bottom, and it may not even happen. That is also a possibility. So what to do? Answer to that question is, we should always keep investing. And now how to plan our investment? See, you will hear different views from different people, and what I share here is my view. Let's say you make some amount of money and you decide that from 10% to 30% of your savings, in between any figure you can take, you want to invest in equity market. Now why I say 10%? Because it should be significant. And why I end at 30%? Because equity market are very risky. So we have to mitigate our risk by investing in other avenues like real estate, mutual funds, and FD, and other investment that you might consider, or debt fund and all. So let us say somebody decides to invest 15,000 into the stock market. Now how they should divide their money? So let's talk about that. In equity markets are risky, but within that risk also there are some conservative, or there are some low risk avenues to invest. For example, one of the low risk investment strategy could be to invest in nifty Bs. So let's say I make 15,000 rupees. I want to invest 15,000 rupees in equity market. So the best way would be to divide this 15,000 into some, let's say I divide it into some 9 to 10 parts. One part of the money should definitely go to nifty Bs, because nifty Bs are actually low risk. Why they are low risk? Because nifty Bs is a ETF fund which is supposed to be invested almost in equal proportion as their weightage in nifty in top 50 stocks. Now what happens if one of these companies are not doing well? They will take it out, and as this company is taken out from the nifty, then another company is added to the nifty. The same way the funds movement also happened. So that way you are not at risk. If nifty goes up, your investment will go up. Then another is nifty mid cap 150. So now you are de-risking and also investing in growth funds, because mid caps are inherently, they might actually grow better or at faster rate than nifty. Then there is something called junior Bs or bank nifty Bs, or bank Bs. You can actually decide based on your risk appetite. Typically, bank Bs have given very high returns, but they are highly volatile. And junior Bs has also given very high return over a period of time, and they are less volatile compared to bank Bs. So you can decide the way you want to do. So I would say if I need to invest 15,000, I would invest 2,000 in Nifty Bs, 2,000 Nifty Mid Cap 150, and 2,000 in bank Bs or junior Bs. Maybe I will select junior Bs to de-risk my investment. Now rest of I'm left with 9,000 now. Let's say I want to divide this 9,000 also into 9 different parts. So what I should do is I should invest 4,000 rupees in Nifty 50, or maybe the stocks which are very popular or which are known companies who actually who tend to do well every year. But when I say they tend to do well, they don't do well drastically. I mean, your stock may not double in 1 year, but stock should give you maybe better than FD. So these companies include Reliance, ICICI Bank, HDFC Bank, Infosys, TCS, Maruti, or ITC, or Asian Paints, or Titan. So you can select based on your understanding of the market. You can select maybe 4 or 5 companies of these. Now rest of the money you should invest in slightly high growth stocks, the companies which can give you higher returns than FD, but of course they also pose a high risk compared to these these companies. And the names of these companies include Aarti Industries, Apollo Tyre, Bata, IRCTC, even Tata Consumers, Indian Hotel, Voltas, Mindtree, Polycab, Jubilant Food, or Motherson Sumi, or Escort. So you can pick any of these companies. Now, how to invest? So let's say you want to invest, as I said, 15,000. So should you invest 15,000 in the beginning of the month as you get salary? May not be a best idea. Again, you should also decide when do you want to invest, and you should invest some equal amount of money every week, and preferably in stocks. You should invest on the last Thursday of the month. The why last Thursday? Because it's a expiry, and we have seen over the years that if you invest your money on the expiry day, you tend to get slightly higher returns. Of course, if you don't have time, you can always invest a few days before or a few days after as well. And on the index, maybe you should invest on the Monday of every week, maybe some equal amount. So if this way you divide your money and invest, you are actually de-risking in the risky investment, that is equity. Now the another question is when you should exit. Now that's also very important. Let's say I'm investing every month in Titan, and I hear in news that government is coming up with some gold scheme or some extra tax on gold, which will reduce the incentive for jewelry makers, something like that. So that Titan might not do well, at least in short term and maybe in long term from now onwards, right? Because there is a negative news, or maybe there is you're talking about Reliance, and you heard that the Reliance majority shareholders are fighting, and there is some internal fight going on, and then something like Yes Bank or something like that can happen. So if you hear that news, better exit, because you already made your money, right? You have already made your money, and start investing in some other company. So that is one reason to exit. Another reason to exit is you need money. You have invested over like say 5 years, 10 years, and now you have made enough money, and you want to buy a house, or something you want to buy, or you have some major expenses coming up. That is another reason to exit. What is the third reason to exit? Actually nothing. Why you should exit? You should never exit. You should keep investing. So these are my views on how when to invest in stock market, or is it the right time to invest in stock market. So to summarize, right time to invest in stock market is now and always. And it is important to have a good strategy to invest in stock market, because that will give you a very high return. And at the same time, you also need to de-risk by investing in some of these Nifty Bs, Nifty Midcap Bs, or Bank Bs. Thank you so much for watching this video. I hope this video was useful.